to say, as my 20-year-old self, I would have opened the stop up larger, thinking that, okay, it needs to go back to this old high as resistance. That was my mentality. That was my thinking. So the stop would be elevated up to here, which does what? Offers up more opportunity for, if it's going to go higher, it's going to dig into that liquidity that would be above that high. So it would be a larger loss needlessly when it's already communicated to me that it shouldn't be doing what it's doing. The imbalance is here. That's colored in. The bodies here are telling you that it has unfinished business up here. So if you started with a short down here and your stop is at that higher, just one tick above it, as I hypothetically outlined, you don't have to sit there and take the full stop. There's a logic behind where you can kill the trade, where it's no longer a viable setup, because the candle's bodies are doing what's in there would be a full stop out. So you don't need to panic. You don't need to be fearful, but you do have to respect the measure of risk. And if you don't see the signatures and price action supporting your idea, you don't waste time and spend mental capital worrying about the trade setup. It's either going to be good or it's not. The trade immediately starts delivering for you or it doesn't. And if it doesn't, that's problematic. Then by having that imbalance framed, you start seeing a body like that. That right there is your first warning sign. And then we open up the next candle and we trade higher than that candle. That's it. You kill it. You don't hold the short from that point on. So what do? You wait, you move to the sidelines, and then when it goes higher like that, where it would have been an initial stop out, that would have been a full stop, you feel better about yourself because you've managed risk appropriately. And you're not reacting to price. You're reading price, you're letting it tell you the narrative and the story that it had unfinished business above here. Why? Because the imbalance should have kept the bodies inside of it, and it was unable to do so. So we're not taken by surprise. It just didn't pan out in a low probability condition. So all these things become much more impactful in your learning. So that way you're not guessing. You're not trying to, pull things out of thin air and hopefully it pans out for you. And you're not worrying about getting stopped out. We're looking at the stop in relationship to what the price is delivering. And if it's outside these imbalances where we know, based on my concepts, the bodies are not permitted outside of it. The wicks are. As soon as we have a close outside of it, that's indicating that this is probably going to have to be revisited again. And if your stop loss is there on a short, and you don't see this, as I outlined in real time, you'll get a larger loss when it's not necessary. That's not necessary. Now, there's going to be some times where the market does go against me and it just snaps and runs for the stop. There's nothing you can do about that. That's the reality of trading. You're going to have that. It's a cost of doing business. No one's perfect. You're not going to have 100% strike rate. And this stop has been paid. It's been paid to do its job. Protect you from taking larger loss. Well, you still have that responsibility as a trader by watching price action. And this is why it's important to be listening to these boring parts, because you now have learned how to manage a stop loss.